On board then, Raghav Kabra, CEO at Raghav Productivity Enhancers, joining in on the show right now. Raghav, great to have you on the show. Just looking at your quarterly performance and your EBITDA margin improvement has been witnessed, and a consistent one at that, I must say. Highlight some of the factors which are driving your improvement for the quarter gone by, and then thereby, what is your full year guidance that you foresee?
Thank you so much for having me here. So definitely it's been a very good quarter for us. In fact, a very good year as well. And we expect the upcoming quarters and upcoming financial years to be on a similar growth level that we have showcased in the past years as well. So the margins have definitely increased. Primarily, it's been because of an increase in the exports by our company. So previously, like a couple of years back, we were close to 10% of our revenue was coming from the export section. Now it's almost 40 to 50%. So we earn a lot more money that we do in the domestic market as compared to the exports market. Additionally, we've also been supplying to the foundries industry. So we're supplying to the steel market and now to the foundry industry worldwide as well. Over there as well, the margins that we gain are much higher as compared to the domestic steel industry. So definitely, these are the factors that have helped us grow our margins in this quarter. And in the upcoming quarters, the guidance that I can offer you is that our new plant is scheduled to start in this quarter itself. In fact, in this month itself. So we are going to get additional capacity of close to 108,000 tons annually, and because of that, the margins are going to increase, and the overall revenue and the profitability definitely is going to get a lot more boom.
Be specific about what you see in terms of revenues, because in FY22 you managed to cross about 100 crore rupees worth of revenues for the first time ever. Given how consistent you have been in your revenue performance since then, could you give us a ballpark figure?
So we really can't offer any ballpark figure in terms of revenue, but as you can see that the current plant which is running is absolutely running on the optimal full capacity. So that is completely be going up. Additionally, because of the new capacity being coming up for 108,000, which we plan to fill as soon as possible, the revenue is definitely forecasted to increase quite a lot.
Why are you growing in a business which ultimately is a cyclical business, which is related to global demand, inflation, and recession? Ultimately, your client or your buyer is a steel company. There is a recession in the world. So why is your product demand strong?
So there's a very, very interesting reason for the same. So our company is called Raghav Productivity Enhancers Limited, and we basically enhance the productivity of steel plants and foundries plant, particularly induction furnace based steel plants. So what happens exactly is that when there is a recession and when there's a slower demand for steel, or basically when the steel plants are running at low capacities, what happens is that they start focusing on how to increase their productivity using other means. And when they focus on that, that is where a very niche and a very specific product that we manufacture comes into play. So then that is when they think that, okay, we are ready to pay a price which is double or triple as compared to the market for Raghav's product, and then use it and then try it on in their plant and then see the increase in productivity. And we gain market share when there's a recession. So as you can see in the numbers that we've showcased for the past 5 or 6 years, there's been a lot of steel cycles, but we have grown tremendously in all of the last 5-6 years. It's primarily because of the benefit that we provide to the steel and the foundry plants. And that is where the shift from a local or an unorganized player to an organized player like Raghav to increase their productivity.
Current utilization levels at the existing plants, because you've got some new capacities, I understand, coming on board. So what kind of revenue potential are you looking at? And, will you be able to achieve optimum utilization?
So right now, as I said earlier, the old plant is running at full capacity. That is where the numbers have come up. We have grown almost 50% in terms of revenue as compared to the December quarter last year as compared to this year. And this capacity is right now full. What is happening over here in the old capacity is the change in mix from the domestic to the exports division. The new capacity that is coming up is very, very interesting because as you know that we are a very, very R&D focused plant. So anything that we make is after years and a lot of money being spent on R&D, and that is when we launch it in the market. So the new plant is very, very differentiated as compared to the old plant. And this new capacity is going to give us much higher areas to target in terms of gaining market share into differentiated geographical areas as well as differentiated industries, like the foundry one. So over there, the revenue, we expect that we will be able to fill the new plant as soon as possible. And the old as well as the new plant, and the change in mix is definitely going to increase our EBITDA margins, our overall PAT margins, and the overall profitability of the company at the same point of time.
What is going to be the optimal utilization for it? And will it be a phase expansion, or when you start, it's going to be right from the word go?
So that's a very interesting question. So the 108,000 that's coming up is actually part of phase one. This additional capacity that we have put up with a very minimal capex, we will be able to triple this existing capacity in the plant. So from 108,000, it can go up to close to 3 lakh tons with a very minimal capex. You can expect close to 10 or 12 crore rupees of capex of what we can grow this 2 or 3 lakh ton plant. So what's going to happen is that once we fill this 108,000 ton capacity, as and when we see that okay, this capacity is being filled up, we are going to put in the additional capex and increase that capacity, because the demand that we foresee for our product is very good, as in the domestic as well as the export market, and it's continue to grow. Another point which I would like to highlight from the demand point of view is that we supply to induction furnace based steel plants. Now what's happening exactly in the world is that people are shifting from a blast furnace, the traditional blast furnace based plants, to induction furnaces, primarily because they're low cost in terms of putting up the plant, and the basically the environmental concern towards steel plant is much lower as compared to the blast furnace in the induction furnace industry. And we are seeing a lot of these furnaces being put up in the developing nations, in Africa, in the Middle East, in Southeast Asia, and in these regions. So definitely yes, yeah. To answer your question, the demand is going to go up for sure.
Okay, great to have you on the show, Raghav. Good speaking with you, and we'll chat again soon.
Thank you so much. Thank you so much.
Okay, that's the word coming in from the man.